Good morning, good afternoon, or good evening, and welcome to the Friday, the TGI Friday. Thank God it's Friday, the 19th of April, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. Going to go through a fairly quick webinar, not a huge amount to say. I know we've got geopolitical tensions, but they're ongoing. So there's not a huge amount to say in here going into today. So we'll rattle through quite quickly today so you guys can get on with looking at the markets. So we're going to run through the calendars, the macroeconomic calendar, the micro earnings calendar. We'll take a look at what we've got on the central bank side, on the geopolitical side, on the macroeconomic data fundamental side. And we'll just a quick dip into the charts. So on the calendar side in here, data was light yesterday. Data is light today. We had a host of Fed speakers in here, all now, continuing to toe this line of, no rate cuts coming anytime soon. The main standout here, where can I find Bostic? There he is. Fed's Bostic. Bostic is a relative dove within the Fed. And he said, because we're beginning to create jobs and wages are rising, I'm not in a mad dash to get there. So basically, he's not in a hurry to cut rates, and he is on the dovish side of the central bankers. So certainly looking for the no rate cuts coming in May or June. The outside chance now of a cut in July. The other thing to mention on the Fed side is we go into the blackout period tomorrow. So today's the last day of Fed speakers. Tomorrow, blackout period until after the Fed meeting. The Fed meeting on the 30th of April, and then we get the result of that on May the 1st. So we'll be watching out for that. So no Fed speakers over the next week and a half. Looking back into today, though, what we do get, we've had some data out of the UK today. Nothing really too surprising on the retail sales side, slightly worse than expected in here. And going into on the data side, nothing of note out of the US. We do get some. Where are we? I know we've got some Fed speakers in here today. Where are they? There you go. Goolsby speaking today. And if we go to 5 things, I'm going to jump to 5 things to start your day in here. You can see Goolsby's like really the only thing on the calendar in here at the moment of any kind of real note. So very, very light going into today. Nothing really for us to massively focus on. Goolsby speaking at 10:30 Eastern time. And in here, but I do want to talk about, actually go to the earnings kind of, obviously Netflix yesterday, despite yesterday, just jumping back to yesterday, Netflix was the standout for the week, despite just beating on the revenue side and significantly beating on the earnings per share. And the net reaction has been negative in here, and we'll come to that shortly. The other thing, though, I want to speak about is we got this. So this is the week ahead. The next week, crowded mega cap trading US stocks awaits earnings test. So obviously, a lot of the drive high that we've seen for this year so far has been for, whether you want to call it the FANG stocks or the Magnificent Seven. They've been driving markets higher in here. Tesla, Meta, Google, Microsoft are all reporting next week. Okay, and they're part of the group of 7, these Magnificent Seven, these companies that 24% gain last year. They drove the S&P 500 higher. So it's going to be interesting. We get all of those next week. Tesla, Meta, Google, and Microsoft all reporting next week. So a big week upcoming on the earnings side. As I say, not much to focus on though into today, and that most of the stuff we've had, if we go to today, is already out. Okay, so, and these are Procter & Gamble, American Express. They're important, but they're not really had a big impact on the overnights in here. We've already had those out already in here today, so nothing upcoming on of significance on the earnings side either. Let's go to that 5 things. So the main event, has been overnight. So we did have Netflix, as I say. The Netflix in here, the issue was they down 6% in pre-market in here. Decision to stop disclosing 2 metrics to investors from the first quarter. So they've stopped doing that, and that's the movement to no longer disclose quarterly subscriptions from next year will not go down well. So that's kind of the bit of the issue today. That's always was a key metric that we were watching, and they're saying they're not going to disclose that from next year. So the market's taken that as a negative in here, even though the numbers were, the actual headline numbers which we just looked at, were very positive in here. Sorry, going back to 5 things. So the main thing overnight, there's obviously the markets being on edge, and we have seen a sell-off and a rebound in here. So we did get the kind of tit for tat retaliation after the last weekend's missile attack on Israel. We now had a missile attack from Israel onto Iran. It doesn't seem, it's been very much downplayed by Iran. Initially, obviously, get a knee jerk into a risk off mode. So we saw bonds go up in price, down in yield, and we saw buying bonds as a safe haven, buying the dollar as a safe haven, oil spiked higher, and stocks sold off. Okay, that's your natural risk off scenario. So risk off when traders take less risk, taking risk off the table. That's the way to remember it, because it sounds a little bit counterintuitive, risk off. What we mean is here is taking risk off the table. Okay, so taking less risk, and so in a risk off scenario, that's typically what we would see in here. And obviously oil higher because of concerns about potential disruption to the oil supply. And then we saw dollar rally as a safe haven. We saw bonds rally as a safe haven as well. US government bonds go up in price, down in yield, and then we saw stock sell off. But then we saw kind of a reversal of that as well after it's been downplayed, because yes, there was potential. Israel said there was going to be a retaliation. Then the retaliation comes through, and then it doesn't really have a significant impact. So markets have kind of gone into risk off and then flipped back and rebounded and recoiled much of that risk off. So we have that flight to quality. We also call it a flight to quality, a rush into safe havens, and then we got a reversal of that. So that's what they're mainly focusing here. Dangling 5% yields. PIMCO, BlackRock Capital Group, dangling the prospect of 5% yields to their investors into fixed income funds. Not really relevant, massively relevant to what we're looking at. Netflix, we've already covered. Paramount in here, gainers on the overnight in here, almost up 10% in here this morning, and that is on the back of Apollo Global Management and Sony considering a joint offer to buy Paramount, which includes CBS and MTV. So, and as we said, a light on the calendar going into today. So stocks on edge after attacks as havens parry gain. So basically safe havens were initially higher, oil and dollar up, bonds up, and then back lower. Stocks went down and then rebounded in here. Okay, so that's been the tail of the tape overnight. Again, markets unsettled by Israel, Iran, tit for tat. What else about oily raises advance? So again, what we've seen in here, if you've been asleep during all this while this has happened, is basically a rush into risk off, a rush into safe havens, and then that trade mostly reversed in here. So oil up, bonds up to higher prices, lower yields on bonds, oil prices up, and dollar up. And then we saw stocks down, and then we've seen a reversal of those moves subsequent to the initial knee jerk. Asian stocks drop on concerns over Middle East tensions and the ongoing hawkishness from all those Fed speakers. Stocks on edge after attacks, havens parry gains, all the same things in here. And then Netflix in here adds 9.3 million customers, says gains will slow though. So negative forward guidance also in here. I'm not going to go through the CME calendar. Oh, actually not loading properly there. Because it's pretty much saying the same things that we've been looking at. Very little change to that CME calendar. No rate cut expected on the outside charts now. Still less than 50% chance of us getting a cut even at the July meeting in here. On the overnights, obviously the Asian stocks got hit because it happened in their hours in here. So the Nikkei was down over 2.5%. The Hang Seng down 1%. As we went in, and they closed obviously down as we were in risk off. European stocks down about 0.5% in here, between 0.3 and 0.6%, but were further down and have rebounded subsequently. And US stock averages are down, but they have rebounded in here. So they were down a lot more than this. We'll take a look at the charts quickly, but they were down a lot more than this. But the S&P down about 0.4, and the Nasdaq about 0.6 in here this morning. And you can see in here yields in here. We spiked down in yield. So remember, that's down in yield is higher in price on the 10-year, but then have recoiled that. So that says you can buy the safe haven, buy the bond, price goes up, yield goes down. It won't pick it up in here because these were obviously written last night. But this all still looks very negative. We were down previously in price. So we did get a spike back higher in price and now back down lower on yields. And stocks in here lower, and then we have gone lower and rebounded. And we'll just dip now into the charts. It still remains bearish. I've been pointing out levels in here But obviously we had this significant price action. We've had this flush out. Now this does look like now more like a flush out, right? So we have this long, big sell-off and big rebound. We wiped out these supports here. This is on the ES, and similarly going the NASDAQ in here, big tail in here, wiped out supports. We really wiped out this support, wiped out further support in here. So lowest levels in here since on the NASDAQ. We're going back to levels not seen since January this year, the middle of January this year, and I think it's similar on the S&P as well, down through these lows here. So not since the end of January as well, beginning of February actually. So we've gone into even deeper territory, but then we've had this significant turnaround. So we've got positive. These would be hammer candlesticks at the moment, right? Either hammer candlesticks or we've got positive. What we got in here? Oh God, my mind's gone blank. Either hammers or the dragonfly doji or a hammer pattern, whichever way you're gonna, depends where we close obviously at the moment as well. I mean, we could close all the way down here and it could be a big negative Marabuzo, but this is giving some hope. However, the market's got to do some more work really. We've had that big sell-off and rebound. I think, I'm not going to get too excited until at least gets back above like the breakdown point here. So really 50.47 or realistically 50.62 on the top side will be my, so here's, you got this breakdown trigger in here, the market kind of flirting here, and then boom, we fell out of bed. So it needs to get back above there, 50.47 and 50.62 on the ES, on the S&P, and then on the NASDAQ in here, breakdown points even higher up here. So you're really looking more 17,550. 17,590, 17,550 to 17,590 needs to really get above there. Ultimately, it's all the way back up here, but I mean, I don't see it getting up here today. But we could see a turnaround today. Just watch out. Still bearish. The charts are bearish. Everything's still bearish. Still in the downtrend. But we are, you are seeing potential hope of a little turnaround here. We may get some short covering into the weekend, but then again, we could get an escalation of the tensions in the Middle East. So, how many people are wanting to go home, particularly long in here over the weekend if you're a swing trader. So it's going to be, I think, still playing it from the bear side, but just watching out. This could flip into more bullish in here as we go into the session today. All right, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. Have a great weekend too, and I'll be back with another bull versus bear webinar on Monday. Bye.